Chairman and Managing Director, Mr. Manish Makan, CEO of IGTB, Mr. Rajesh Saxena, CEO of IGCB, Mr. Banesh Prabhu, CEO of Intellect AI, Ms. Vasudha Subramaniam, CFO. Besides, some other senior members of the Intellect management team are present in the call. Now I hand over to Vasudha to take you through the financials, and later Mr. Arun Jain will give his comments on the same. This would be followed by Q&A session where your questions will be replied by the senior members of our management team. Once the Q&A starts, you can ask a question by clicking on raise hand, and we would unmute you so that everyone is able to listen to you. One safe harbor. I would like to remind you that anything which we say which refers to our outlook for the future is a forward-looking statement. This must be read in conjunction with the risks the company faces. With this, I request Vasudha to give her briefing. Over to you, Vasudha.
Thank you, Pravi. Good evening, everyone. I'm happy to review the financial highlights of Q1 2025 with you. Our total revenue for the quarter was 605 crores, with license revenue recorded at 125 crore and AMC at 121 crore. We had a gross margin of 57%. Our EBITDA was 121 crore, which is 20% of our revenue. Our PAT was 74 crore and PBT was 98 crore. During the quarter, we have collected 556 crores and our cash position as at the end of June ended at 813 crore. And during the quarter, we had won 11 deals and have gone live on 12 digital transformation projects. Our DSO as of 30th June is 126 days, and excluding GEM, it is actually 101 days. Moving on to the LTM metric on a comparative basis, our total revenue for the last 12 months were 2,318 crores, with license revenue at 458 crore and AMC at 463 crores. Our EBITDA crossed 500 crores, which is 22% of revenue. Our collections during the period crossed 2,300 crores, and our PBT for the period was 418 crores. So during this period, we had won 52 deals and we had gone live on 56 digital transformation projects.
You mentioned about the
DSO, I have said. So
about the GEM. We have excluded GEM from this.
Yes. So when I say comparable basis, like we have excluded GEM in this. Now talking about the composition of the currencies in the revenue, USD is at 37%, followed by INR, which is represented by 26%, CAD 8%, GBP is 14%, Euro 6%, and others constitute 9%. Now to give more color about the new deal wins for the quarter, we had 3 new deal wins in North America. One with Vancity, the Canada's largest community credit union. The second is on the insurance company. And the third is again on the wholesale insurance brokerage company. So we will hear more about it from the CEOs. And there were 3 new deal wins in India and Bangladesh. One on the Indian public sector insurance company. Second is the major one, which is a leading financial institution and a global investment management firm jointly created a strategic alliance for the wealth. And the third is the stock exchange in Bangladesh. In ANZ, we had a couple of new deals. And in Middle East, in Jordan, we had 1 deal. Talking about the accolades, like we were ranked number 1 by IBS in retail core banking, transaction banking, and in retail lending. Yeah. And this is again another accolades, and the analysts have reviewed us and for Datos and Celent and others. Talking about the pipeline, we have crossed 8,500 crores during the quarter, which is in fact more than 100 million for the quarter, I would say. And we have on the Destiny deals, we have about 86 Destiny deals with average size of about 52 crore. And the Destiny deals are increasing from 73 in Q1 to 84 last quarter to 86 in this quarter. Out of the 86 new deals, 23 deals are having a value of more than 500 crore, and 28 are in the range of 30 to 50 crore, and 35 are in the range of 20 to 30 crore. Let me hand it over to Arun to talk about this purple fabric.
Welcome to all of you. So this I'll take slightly later, the purple fabric. Let me just comment on the business result first. So I think we will finish our quarter on 600 crore plus revenue. This is a fifth quarter in 600 crore when we cross 600 crore as a revenue. And I think our journey all the time in last few years are 100 crore each time, 500 crore, 600 crore. Now on the journey, we are waiting for is 700 crore. So this period of 600 crores has resulted inclusive of GEM going away in the Q3, but still we are able to sustain the water above the 600 crore number. Our focus is to get to 700 crores. So we are preparing the organization for 700 crore per quarter number. And that's what the entire eMAG.ai and Purple Fabric, which I was showing the slide, will drive towards that. In the journey of 600 crore to 700 crore, I would say the wintering period for us has gone slightly longer. This quarter, we could have moved away from wintering season because one deal of 30 crore plus has been postponed in the last week of June. This deal was almost on, it is signed by the MSA, but the deal has not been executed just because the bank financial budget limits are over, and they will be signing this deal in next financial year, starting January, which is our Q4 quarter. With that, we could have managed all the expectation of the investor from a quarter-to-quarter perspective. But overall, our traction is extremely high right now. As of now, our costs are also contained around 480 crore range, and that's a range which we'll be maintaining in next few quarters. So the new revenue what is getting generated will translate into the 80% of it will translate into the margin of the organization. So that's a important point which you mention all the time, that how is the margin improvement will be happening on a specialized basis today. This quarter maybe it will not show the right number because of the single deal of 30 crore which could have come to the margin itself. If you add that, the margin could have been better. During this quarter, we won very significant deals. So sometimes you may not know the intensity of these deal wins when we win in Canada or when we win in US or when we win in Australia. And I would like to invite Rajesh to say, when we say Vancity deal, we publish a press release, but what does it mean to come into, entry into the Canadian market, a credit union market, which is run by over 40-year-old system, 30-year-old system, to enter a new player in a market. So what went behind winning this deal? Because then what is the futuristic view of winning such deals in Canada Vancity itself, Rajesh?
Yeah, thank you, Arun. I hope you can hear me.
Yeah.
So let me just talk a little bit about Vancity. Vancity is the largest community credit union based out of Vancouver, which is the western zone of Canada. And it is the largest credit union in Canada. And this is a deal that we have been following through for the last 18 months. And this deal is very significant because, first of all, the deal is about a digital engagement platform for retail SME and subsequently also for the commercial bank. So it's a complete digital experience, transformation experience deal. And this is a deal which will be where we will be doing the full managed services on Azure Cloud. So that's the contours of the deal. But why is this deal significant? Is because in the credit union space in Canada, there are a couple of vendors uh, who are the provider for this digital engagement platform or lending platform and core banking platform. And winning this deal from one of those existing providers who had actually some time back tied up with Backpace, and that implementation failed for them, is a very significant milestone for us. And Vancity is a leader in this space, and therefore there is a lot of buzz in the credit union space, and we have a couple of leads which have come up after our announcement of the Vancity. And we have now started going into the implementation part of this. So this along with the footprint that we have from a GTB perspective in Canada makes us a full scale, starting from credit union space all the way to tier one banks, a full uh, uh, space where we will have our products in the market. So that's about Vancity. But let me talk specifically more about North America. I think a couple of quarters back, we had talked about, at least from a from a GCB perspective, we had talked about Europe as our strategic inroad. And I think over the last couple of quarters, we have demonstrated that we have been able to build a good momentum in our Europe market. And when we look at Europe, when we look at when we look at Europe, we are seeing a very good pipeline being developed in Europe, and you will see the results over the next couple of coming quarters. After Europe, we decided that we will get into Canada from a GCB perspective, leveraging a GTB footprint, and that's what we've been doing for the last couple of quarters. I'm actually in North America for the last 5 weeks, spending time predominantly in US. We have just announced, some of you may have read it, we have just announced that we have hired Janine, who's going to be leading our GCB business in US market based out of North America. And she and I spent a lot of time meeting prospects, consultants, partners, etc., to understand the contours of this market and deciding what to be a strategy to enter into US market. US market, as you know, is a highly regulated market, tough market, but also from a TAM and a SAM perspective, very huge market. So we are very positive. We are looking forward to, in the next couple of quarters, into our US market entry. Along with what we are, Janine, we are putting a team of people with Janine. Some of them we are hiring from US to get the US experience. A few we will be transferring from India. So we're putting a team of people to go after US market, and we should see some momentum being built up in our US market. Janine comes from a very strong domain expertise. She has worked in Santander and PNC Bank. So we are looking forward to working with her as we take our journey back. So that was a high level commentary about how GCB is moved from Europe as a strategy, went to Canada, and now entering US. And you will hear in the next couple of quarters and years to come about our progress in US market. Arun, back to you.
Thank you. Thank you, Rajesh. Actually, last almost 90 days since we met on 9th of May, which we announced the result. It's not even 90 days. I think all of us on the road. So most of the management team is on the road on various countries, obviously, which result into travel costs to go up. But otherwise, we are. I was on the road. I visited 8 countries during this period, met close to 70 people from the customer side, from partner side, conducting multiple meetings in each country. The event which will happen in IGTB Oxford in London, and then followed by Money 2020. I think we've never been so busy in last 8 years and generated close to 120 leads, almost 2 leads per day is coming up our way in post eMAG.ai April. So when we did 300 people workshop in Chennai. After that, with the picture which you have shown in the beginning, the entire magic of eMAG.ai is surfacing. At this point of time, I just want to invite Manish to see how it's panning out for him in winning the deals in Australia. And these are all the difficult market. Rajesh talked about US market. Manish, over to you.
You're on mute, Manish.
Oh, thanks, Vasudha. And Arun, thanks for giving the brief before this. Uh, like I've been sharing in the previous quarters also, a best-selling product on corporate treasury continues to help us win in the marketplace. So we closed two more deals in Australia in this quarter, which is primarily to help banks to help the corporates to raise better deposits, get them better investment products, and get them better managing their liquidity better. So two big deal wins in Australia. After a previous quarter, we had two deals, one in Australia and one in US around liquidity. So liquidity, our flagship product, continues to help us create that deepening the gap between us and anyone else, because everyone else tries to extend that out from a core banking that I can also imitate and do this. We built the real competency around this. And today we've got about 54 banks worldwide which leverage this capability to extend this, uh, bringing this efficiency to the balance sheet for the corporates as well as for the banks. So that's been very successful. We also closed two deals on DTB in Middle East. Both the product and the market are flagship for us. So we continue to win on DTB in Middle East. Like Arun said, the amount of time all of us were on the road, we've got across North America a number of good opportunities which are maturing and open. Next 2 quarters, we will share number of them. Unfortunately, one deal where we got signatures on the MSA, it's just the last signature where they had to postpone their budget spend from starting in September, the program which they were going to sign in June to start in September, to now start in January, and they will sign in January. Everything was done on that. So that's a significant one, like Arun said, 30 crores, which got deferred. The deal is one, so we should show us in our Q4 from that perspective. In Europe, also we've got good momentum in UK and France going right now. Australia opening up, and there's been a big focus on developing Asia equally. So of what Arun said, two deals a quarter, even Asia, which has not been very strong for us, was very good looking and has good potential for us in the coming couple of quarters, where we will show good results from there. So across the board in all markets, right now activity is at an all-time high. The opportunities, what we call in a P4 stage, number of these things are there. How across the next 2 quarters we bring that in, I think that's where the team is focused in. Thank you.
Yeah. So coming to the next area, Intellect AI, I think this Purple Fabric, you must be reading on the LinkedIn. I'm posting the message every day. So I've reached up to 4 messages: PF Imagine, Purple Fabric Imagine, Purple Fabric DIMS, Purple Fabric Expert Agent, Purple Fabric Triad, and now 2 more are left. So in this slide, which I'm saying is that AI, which is a hot product, and so much generative AI is there. Our research teams had looked at this problem very differently. They looked at each persona. What is required for product manager to look at in AI? What CIO looking for AI? What operations managers are looking for AI? And what compliance managers are looking for AI? So based on all the 4 personas, we designed one of the most comprehensive AI product in the marketplace, where we signed up with all the 5 consulting firms over there, from Accenture to EY, KPMG, Deloitte, PwC. The beauty of this product is it is a comprehensive enterprise connected intelligence platform, and it is using a different set of technologies, and it is giving a choice to the customer to look at it, what kind of a LLM model one wants to use. Now Banesh will tell you how many workshops and boot camps we have done in last 90 days from May to now. Almost every day there are two or three boot camps or webinars happening, and which is driving huge amount of lead generation. So over to Banesh on carrying forward this conversation.
Thanks, Arun. I think Arun's explained the overall Purple Fabric. Intellect AI has been actually working a lot on AI initiatives for a long time right now. I think what we've actually done is we are now able to implement AI using all the large language models, the LLMs. And the LLMs are evolving just about every couple of weeks. We see upgrades taking place by all the LLM providers. I think what our platform provides for a financial institution is the ability to govern AI initiatives. There's billions of dollars worth of money that is being put in AI by most of the financial institutions. Actually, all companies across the board are spending an enormous amount of money on AI. I think while it's on a hype cycle, I think very realistically, the time has come for a significant change to transforming operations in financial institutions using AI. I think the traction is significant. And we did about over a dozen different type of boot camps. Some of them are multiple discussions with certain clients. And I think we're building a very deep pipeline of actually helping the clients implement AI initiatives with governance, with control on data, with control on security. And at the same time, the different people and different personas in an organization can actually make a difference to how they can capture business outcomes from different AI use cases that we are putting together. We have over 55 documented AI use cases, another 80 odd that we are looking at right now. Now, if I look at the quarter, so our AI platform, which is at the heart of our insurance business, so Purple Fabric is what we have sort of positioned the name of this platform. Purple Fabric, along with eMACH.ai for insurance. Last quarter, we did 4 deals. This quarter, in this first quarter, we have done 2 deals. 2 more deals were signed, but they just didn't make the cutoff for 31st of March. I must remind you that all of these deals are using a combination of eMACH and AI. And also, all of them are subscription deals. So from a financial perspective, you will have to see that these are longer term, subscription type of calculations on the financials. I'm also happy to say that our wealth and capital markets business, I think Vasudha touched on, 2 deals, but just to talk a little bit more about it. This is a existing client that's actually doing the first implementation in Bangladesh of a commodity derivative exchange for which we are providing we have a brokerage platform called Capital Alpha. We are actually implementing that for a very large commodity exchange setup in Bangladesh. The second is very exciting. It's the largest company in India, joint venture with one of the largest asset managers around the world. The asset manager manages over 10 trillion in assets under management. I think we are seeing phenomenal increase in wealth generation across the world. And more people are actually talking to us about how we can implement our eMACH wealth solution along with what we used to call embedded AI, but it uses a combination of Purple Fabric and the eMACH suite that we have to implement these wealth and capital market mandates that we won. We won 3 other ones. I think the contracts in progress. There's been confirmation that we've won them. One of them is the largest investment manager in Saudi. The other one is the largest private bank one of the largest private banks in India, not the largest, but one of the largest. And also, we won the mandate of one of the largest global multinationals that's wanting to scale up their wealth business. So I think the wealth and capital markets has a fantastic pipeline to look at. The eMACH resonates, the AI embedded resonates. And I think over a period of time, that combination of eMACH and AI, which is eMACH.ai positioning, is best positioned for the future. Thanks, Raul.
Thank you, Banesh. Thank you, Banesh. I think so. I talked about it in last 2 years back. When are you looking partners and distribution strategy? I think this year we started the journey with making our applications partner ready. And partner eMAG.ai plays a critical role in being partner ready system. So what, from an investor perspective, what does the eMAG.ai means? Why we are so excited internally, and why we want to. So how do you simplify the language of eMAG.ai is a element for typical investor, because for technologists it's a huge excitement because it's an open finance platform. So today the word open finance platform, which is a first principle thinking, we call it first principle thinking, means we ask the question why the bank exists, which is because events happen in the life of a finance, any of their customer. So if we design a system which is based on the first principle thinking from events in the life of a retail customer or a wealth customer or a SME customer or a corporate customer, and then look at it, the services bank provides, and which gets connected to other application, which is through APIs uh, on a cloud, and make it personalized, headless, and provide intelligence to it. It removes a lot of complexity which a bank has built over the period of time. They can wire the entire application based on customer desirability, and that's why Rajesh, when we selected in Canada, because they found that digital experiences, if it is based on first principle thinking, we are mapping customer desirability to the business outcome, so which we call it organizing the thinking space, expanding the performance space, and impacting the business outcome. So this is where we are able to put 329, decompose all banking business in just a one single book, where all the elements of the banking has been put onto the single banking chart. So now this, once we put this chart in front of the customer, he has a choice to put the entire chart where what he needs. So we are not selling the full products. We are selling what he needs. And if he needs portfolio management in only in wealth management system, he can say portfolio management is required. I can do it. If he require only relationship manager office because he has a existing Avloq install and he wants RM office, we can give RM office. Or this can be extended to the existing system, and coexistence is possible in existing application. That's what we are able to disrupt. And that makes my GSI, the global system integrator, very interested in our technology. And we have conducted almost one session every week for each of our global SI on eMAG.ai, because they can use my specific microservices, set of microservices, to include in their value proposition which they are offering to their current customers by doing and accelerate their journey. So when the budgets are less, they can expand that space substantially, because there are 329 microservices, there is a 500 plus events and 1,700 APIs. Along with that, we built up iTurmeric, which I explained earlier. It's a completely codeless platform for composability and solving 4 key issues of transformation. For any transformation, you need integration, you need UX, you need workflow, you need data. Now, all of it is wired and comes from single platform, reducing the cycle time for delivery to half, as well as number of defects to less than 10%, to just almost 80% defects are not there because of the codeless platform. And combining with Purple Fabric to build intelligence agents along with the operational process, it's a truly partner-ready technology. We took some longer time to get to partner-ready. In 2022, you were asking question, why don't you go to partner-ready? We wanted to ensure that they have a right toolkit, right methods to get into the partnership model. The new leads which have come, normally we used to add some 50 leads per quarter. This time we'll add 120 leads in a single quarter, because of most of them additional leads come from our partnership network. We have close to 600 crore funnel with the partners which we are working on. So And some of the detailed conversations are happening where partners are getting certified themselves on turmeric or purple fabric and going together in few deals over this period of time. We are seeing this is a very disruptive technology, and opportunity going forward is significantly large. And because of that, though the first quarter result is not in line with the expectation of industry because 30 crore slip on the contract, but 15% growth, what we talked about it last quarter, we are fully intact on that number. So that's what the current state of business is. So at this point of time, I just want to leave for question answer. And I have seen more than 200 people join in this investor conference. So we can have a good conversation based on understanding of what we are doing in eMAG.ai in this technology space.
Thanks, Arun. Now the forum is open for the Q&A. In case you want to ask a question, please click on the raise your hand. I repeat, please click raise your hand and we would unmute you and you can ask the questions. Now first we have Mr. Sameer Dosani. Mr. Sameer Dosani, please unmute yourself.
Can you hear me?
Yes, Sameer, please go ahead.
Yeah, so a couple of questions. One is Rajesh, on US business, we're trying to foray in the US as a geography. If you can just highlight which are the areas that we are targeting and how's the competitive intensity because it's very difficult to sell software business banking software in US. We've seen in other players. So what is the competitive intensity, and when do you think there will be initial signs of some progress here, and whether it will require any investments on your part? The second question is for Vasudha. I mean, when you look at your funnel and deal wins that have been phenomenal, but when I look at your last 12-month revenue growth, obviously excluding GM also has seen some deceleration, right? We've come down to 12%. So do you think this can accelerate given your deal wins, and whether you hold your team's guidance on revenue? And the third is on Gen AI, very simply, if you can just indicate the number of projects, like in some way, can you give us some metric to quantitatively track that, this is the number of projects that you have worked on versus, last quarter, this was the number of projects we have worked on. So we can track that. So these are the three broad questions. Thanks.
Sure, I can take the first question. So I think from a US perspective, as you rightly said, so first of all, it's a very good question. I think as you rightly said, US is it's a competitive market. It is also highly regulated market where you can have federal requirements, state level requirements, etc. So you need to make sure that your platforms are certified and attested. However, having said that, the market opportunity is very large. And what our market study has indicated to us is that there is a lot of legacy, and what we bring to the table, eMAG.ai, can really disrupt the US market if we get our act together. So there's an opportunity is huge. And so that's the landscape. Starting from a strategy perspective, I would say that's a competitive information. So I would like to discuss it on this call. But enough to say that we are in the process of identifying what would be the segment and what are the key products that we will take it to that segment, and discussing internally debating the GTM strategy for that. So over the next couple of quarters, we should have that in place and we will go into the market. It's also important for us to put a team of people. So there is some amount of investments that we are making from a US team perspective. I also said we will be transferring some of our people from India. So there is some amount of investment which we will be doing, both in terms of team as well as in terms of making a platform ready for the US market. And just a little bit more color around US market, what we are seeing is that some of the Indian, our competitors and peers are able to enter this market. So, with that and our architecture and the eMAG.ai that we bring to the table, we believe that if we get our act together, we can really disrupt the market.
Yeah, let me
Got it.
take up the second part of the question and Arun might add on. Yes, true, it is like 12% in the first quarter. And as we said, this is the first quarter and we always want us to be measured on a yearly basis, not on a quarterly basis. And we still stick on to the guidance of 15% excluding GEM, and that we are highly hopeful that it will happen. And it so happened that, like Banesh mentioned, there were a couple of deals for which the contract got signed off post the cutoff date and for which we could not accrue the revenue in Q1. And it so happened, and there are some other deals with a high value that we could not accrue this quarter and which got deferred. So we are still hopeful of the strong pipeline that we emphasized and that we'll be able to meet up to the guidance.
So I'm just tracking last 12-month revenue, not Q on Q. So I think that is the metric. I'm sure that is what one has to track. Yeah. So
That's right. So,
okay. Okay. And GenAI level, any
yeah,
like
Manish,
quantitative
how many
metrics
projects you are working
we
on?
can?
So, just to get this right? So we track our pipeline in a platform across all our product lines. Our Purple Fabric pipeline today has almost got, when I last looked at it, it's got about 35 discussions in progress. Remember, AI is at a very early stage. So we have a very rich pipeline building for Purple. We call it Purple Fabric, as you just heard from Arun. And I think that pipeline will be looked at. We will obviously have a pipeline like any other pipeline discussion we would have. We have a GenAI. It's not just a GenAI. It's more than just GenAI.
So 35 projects currently. How much was it like 6 months ago? Any
35 discussions are in progress with various clients, and many of those
6 months back. 6 months back, how much was the number? Is something we can mention that.
Platform has only just been done, so I would say this pipeline has been built over the last 4 to 5 months, where we actually have used Purple Fabric to be able to get people to use GenAI. We've been working on the LLM for many years. We've been investing in it, but the LLM has made a difference to the way in which AI is managed.
Got it. And sorry, last, if I'm allowed a follow-up, so this investment in US, will that impact our margin improvement trajectory, or it was already built in? If you can comment on that, Vasudha. Thanks.
That's what we are currently discussing. Let me in a board meeting also what kind of a new numbers to be put, if additional investment is required or not. We are seeing based on the more traction and winning, we can able to articulate how many additional salespeople will be required. So it's not about technology investment. The more investment will be required in go-to-market investments.
Okay, it's fair to say it will be higher gross margins, or like will it initially have some lower margins than your business, you think?
Obviously, it will be lower margin in the beginning. Purple Fabric requires investment, so definitely we cannot say it is and the revenue will not be front loaded. The revenues are back loaded in Purple Fabric, where subscription based revenues are there. So that is one point which is to be clarified.
Sure. Thanks for that.
Yeah.
Thank you, Sudhir. Next, we have Mr. Rahul Jain from Daulat Capital. Rahul, please unmute yourself. Rahul, you are there?
Hope I'm audible.
Yeah, Rahul, please go on.
So basically, I have a couple of questions. One question is that what I'm observing from last couple of quarters is that the growth in our implementation revenue has not been pretty much catching up the growth that we are observing on the license revenue. So is there any specific reason why this trajectory has gone down to 6-7%, or does it included any L1, L2 services related to GEM for which probably it has an percolation impact there?
Yeah, so I think that's not a with the codeless platform, our implementation revenue will expected to come down. So we don't want to generate because that's not a most profitable business for us. Implementation business, we were doing it. We want to get it done with the partners, or we want. So that's the intentional approach which is being looked at it from a perspective of creating more efficiency. And this growth of implementation may not be that high, and we would like to push license and SaaS revenue more.
And so when you say that also because there are partners, so is there a number that we could say that the number of deal that is going to third party versus implementation versus, let's say, a year back or 2 year back, any data that we could share?
It's too early right now. As of now, we are not saying that we have won too many deals with a partner. We have won 2-3 deals. We are working with the partners. So that data is not sufficient to be shared. When it is ready, we'll share with you. Correct.
And during the quarter, what we have also observed that the software expenses have, I mean, the main cost of services have basically increased during the quarter. Is it more because of the lot many things that you spoke about, the lot of action that you did, but eventually did not culminated into revenue, or these are general investment that has went into the quarter?
And SG cost has gone up. So we acknowledge that SG cost has gone up for two reasons. One is AI, generative AI. Some of the investment have gone, and consumption of the cloud has been baked into this. Some of the bundled cost with a cloud cost also got embedded into it. So these are two areas which is there. And the third 30 crore investment, the deal which was there almost to close, which got postponed by the financial constraint of our client. But all the initial work has been set up for that. These are three reasons for our SG cost to go up.
Right. Right. And any input on the ideal tax rate that you are expecting for this year and next year, that would be of help
We can take it as 24%, Rahul.
for FY25.
Yes.
Okay. Thank you. That's it from my side.
Thank you, Rahul. Please click on raise your hand. Please click on raise your hand in case you want to ask a question. Next, we have Mr. Mehul Panjwani from 40 Cents. Mehul?
Yeah,
Please
thank
ask
you
your
so much
question.
for the. Yeah, am I audible, sir?
Yeah, please go
on. Thank you so much for the opportunity. This is actually not a question, but a request to the entire management team, because we are doing so much high-end work, and we have very promising products, and we are focused on disrupting quite a lot of traditional banking technology. So my request is that as shareholders, we should know, what is it that, how are we, what is it there in our product that is going to disrupt the, market? Because, just in your introduction, you mentioned that we are here to disrupt the American banking software market. So my request is that if we can have a couple of hours of session where we only talk about technology and not financials, so that we know where our company is going, because right now it is very because for a layman it is very difficult to understand that, because anybody can claim that, okay, I'm going to build a disruptive product, but whether we are really disrupting the, I mean, and it is I see, because I've been following this company for a long time, and I have been trying to understand a lot, and I also have a technology background. I was working in the IT industry, but still I am not able to figure out anything. I just go by whatever I Google, and whatever I can make sense out of. But if you can, if we have 2 hours of session for our fellow shareholders, whosoever is interested, and you can demonstrate that, okay, this is what traditionally banks do, and this is what our software will do for them, then we also can be our champions, for through our network, etc. But more importantly, to understand our products. Yeah.
Okay, thank you for this advice. We should do it, Malik. We should organize a 2-hour session for the people. The 2 sessions, I would like to have 2 sessions, one on eMAX session and another is on Purple Fabric session. 2 hours on Purple Fabric, 2 hours on this. In next 1 month.
Thank you so much, Arun sir. Yeah. I really appreciate.
I want to look at it.
Yeah.
To just,
yes, sir.
If you want to really experience the power of Purple Fabric, in 2 days' time, we can we had conducted a session on boot camp where you can put the application wiring for a use case by a salesperson, not even technology person. A salesperson could able to build up a Purple Fabric expert agent in 2 days of boot camp. So that is a simplification of the disruption. So if for certain people, we are organizing a boot camp on Purple Fabric on 29th and 30th August. But for the individuals, that is for the companies, but we'll organize a boot camp. So sometime we can see if you register and want to willing to look at it, time to be spent of 2 days of understanding what AI is going to disrupt the market. What does it mean?
Definitely, sir. I would be really looking forward and eager to attend this kind of a boot camp because everybody's talking about AI, but I don't know, a handful of companies will be really doing actual AI work.
That's right, and because there's so much of noise there, how to find the voice from the noise is a challenge for most of the investors.
Absolutely.
Yeah.
Thank you.
Okay, so I look forward to this two-hour
Yeah.
session first, and then obviously also boot camp as well. So I will
Yeah.
be in. I will request Mr. Malik as well to. I'll send a mail out after the
Sure, Mehul.
meeting. Yeah. Thank you so much.
Mehul. Thank you, Mehul. Next, we have Mr. Vivek Kumar from Bestpol. Vivek, please unmute yourself.
Sir, am I audible?
Yes,
Yeah.
Vivek, please go on.
So, if I take a 3-4 year, I know I'm asking a quantitative question, but just okay, leave this year. If I take a 3-4 year, we will go back to our 20% because you've been investing in a lot of EMI before. If you've come from your investor day 1-2, which is exactly where you explained how the company is going to pan out and what you're going to do with your products, and you're across products, across continents, across countries, and across like you are into insurance, like now you have AI and different business verticals. So can we count on 20% growth to be taken over a 3-4 year period? But it's a purely quantitative question. I'm not.
No, definitely. I think 15% we are looking this year, and 20% is designed for up and down will happen. And there could be 25%, there could be 15%, there could be 20%. So 20% is the organization is designed for, and designed for long-term 20%, not one-time 20%. That's why these investments are required in a technology company like us, multi-product company, multi-geography company, because of ensuring that can we sustain this growth over the next 5 years or not. Otherwise, we'll end up in acquiring the companies and aggregating the companies. That's not what we want to. It's a pure organic company. Yeah.
Sir, and second one is on your partnerships, and if you can go deeper, like you have explained clearly on the 3 verticals by the 3 vertical heads. So similarly on partnership, how it is shaping up, because we have started, and how is the distribution? You remember in the last 2 con calls you were saying was our next 1-2 year is about DDD distribution. So if you can tell us more about how it is shaping up and how confident and
the confidence is now we are the distribution partners are start chasing us. Earlier we were chasing them. So that reverse flow has happened. It started to happen. We need to demonstrate to them that there's a money for them. If we make $1, they can make $2 from us, that they are in the game. If our technologies are not able to help them making $2, so we need to demonstrate to them that in next few years they can build up their own practices of 10 million, 20, 30, $40 million practices around eMAG.ai. And that's a process of building confidence we are going through. And that's the way Rajesh is traveling, Manish is traveling, I'm traveling, and meeting each partner, their senior executive, their CEOs, their business head of the country, to explain what eMAG.ai and how it is disruptive. The question Mehul asked, same question, we need to explain face to face. It cannot be explained on Zoom call. So that's what we are in process of doing it. And that process will continue for another 2 more quarters. And then we get into some few deals to execute. One deal we executed with one of the large partner. It is going live in Philippines, so which is a very good success story. Obviously, one success story of winning the deal and making the client successful speaks a lot of volume in partnership game. But
next few quarters or a year, we will be having much more better.
Yeah, then the acceleration will happen only after 2-3 quarters. We will see the acceleration. Yes, sir.
Okay. Thank you, Vivek. In case anybody want to ask a question, please click on raise your hand. Next, we have Mr. Jay Prakash Parekh. Jay Prakash, please unmute yourself. Mr. Jay Prakash, is there? Looks like Mr. Jay Prakash is not there. No, Mehul has asked the question again. Yes, Mehul, please ask your question once again. You wanted to ask some more questions, I believe. Please unmute, Mehul.
Yeah, I have unmuted myself. Thank you so much. Arun sir, one question to from the follow-up on earlier question you were answering. So who are the partners? How many partners do we have, and can you just share some details about who are the partners?
We have all the 5 partners, Accenture to PwC, EY, KPMG, Deloitte, in consulting partners. In global system integration, we are working with SCL, Coforge, Tech Mahindra, Wipro.
Okay.
So we are working with L&T IT, Hexaware, Persistent.
Okay, so one follow-up question on this. Sir, the deals which we have won are through which partner so far? Because we have won very few deals, right? That's what I understand.
Yeah. We just want to keep it confidential. That may disturb the confidentiality equation with the partner. So.
Okay. And any particular reason why we do not have TCS and Infosys as partners? Is it because they have their own banking product?
That's right.
Okay. Thank you so much, sir.
Okay, Parveen, it's almost on time. Parveen, what happened?
He seems to have logged off.
Okay. Please go ahead asking the question. Unmute yourself. Who is?
Vipin?
Yeah, please.
Is Mr. Vipin Ibrahim, you are there? Mr. Vipin Ibrahim?
I want to ask this question that the revenue 15%, which is mentioned, is based on the reported numbers of last year or after adjusting the government contract?
After adjusting the government contract.
Okay. All right. Thank you.
Welcome.
Thank you, Vipin. Arun, there's no new investor to ask any question. Mr. Vivek Kumar wants to ask one more. Can we?
Yeah, sure. Just one more. We have another 4 minutes to go.
Yeah. Okay, Vivek, can ask the question again. Unmute yourself.
Yeah. Yes, I mean, so just continuing on the partnerships. So if we think that they pay off, and what percentage of our deals will be through partnership in 2 to 3 years, or 4 years, whatever, I don't know, because when will we feel that this is done and we have succeeded in our distribution, and what percentage of deals would be through
our target
partners?
is
that close to something like that? Sorry,
close to 20% deals should go to the partners.
Oh. So we have only 2 minutes, so I have one more question. Can I ask, sir? Or?
Yeah, sure. 2
minutes, but one more thing is there. Anyhow.
Yeah. Sure. And then we can continue.
So few quarters back, you said there are 3 wide movements: this BaaS and GCB, digital, the core banking and insurance, and people spoke about the last two, but the initial BaaS thing, any update from Manish ji?
We did one deal in US last quarter with a fairly large top 20 US bank. So that worked well.
Oh, okay. You're finding success in that in US market.
Yeah. It's focused
I
on
think we
US.
launched the BaaS in US market. Mainly, Manish, BaaS we have launched initially in US market because that's more technology savvy market.
Oh. Thank you, sir. Thank you very much.
Thanks, Vivek. Arun, we have a last question from Mr. Rohit Balakrishnan from iThought PMS. Rohit, please unmute yourself and ask a question.
Yes, sir. Good evening.
Rohit?
Yeah, hello. Am I audible?
Yeah.
Yeah, Rohit, please go ahead.
Yeah. Sorry, I was on mute. Good evening, sir. Good evening, Arun sir. Good evening, everybody. So very encouraging to hear the commentary that you are what you're seeing in terms of your leads and the kind of traction that you're getting. So not immediately, not in this year or not in this quarter or next 2-3 quarters, but let's say 2-3 years out, all what you've been trying to do, I think, is you're trying to invest ahead of the curve. But given the business model, as you have also mentioned in the past, that incremental margins are going to be very high at some point of time. So I just wanted to understand, how far are we from that inflection point where what to 20-22% margins, where we can go beyond that and get to maybe closer to 30% or even 30% and beyond? Because many of the companies that are there in this space, even in India or listed, they have those kind of margins. And you've also talked about that these kind of margins are not not unachievable. So just wanted to hear your perspective. How far are we from that, those kind of margins?
We cannot specify because it's a continuous investment in this area. But the question is margin as of now. Our market share is more important than margin share right now. But the business model which you are seeing and looking at a competitor, the potential of the margin as soon as we cut down the investment can be 40%. So that's not a big issue to bring the margin at 40%. But the question is whether we want to cut down those investment or we want to take a global leadership and keep on investing. So that's the only point of concern. If partnership network, what we are trying to build, it start paying off, this time period can be shorter. If this 12 partners which we identified, if they start producing results quarter on quarter, it can come to 30% plus. We can get it much quicker in next 6 to 8 quarters. We can get into that kind of a number. But it's as the time pans out, I think we expect it should be 30% in 6 to 8 quarters as a management team. But market sensibilities, we need to see how the time pans out.
So no, that's very helpful. No, sir, I think that's pretty much it. That's it from my side. Thank you very much and all the very best.
Thank you.
Thanks, Rohit. That is.
Yeah, thank you very much.
We don't have any further questions. The time is also over. So thank you very much, everybody, for participating in the call. In case you have any follow-up questions, please do write to us. Thank you very much. And thanks the management team also. Thank you very much. You can log off now.
Recording stopped.